selling put options. It is such a magical thing. At the 1 minute mark of this video, a link is going to pop up here. And when you watch that video, it's going to explain to you the unfair advantages of selling put options. Cash secured put options, to be exact. All right, so it's going to be at the 1 minute mark. I put it there so it's easy for you to remember. You won't have to watch it right now. It's going to be at the 1 minute mark. Today we had core PPI, month over month, unemployment claims, and then Friday we got this University of Michigan sentiment report. How did that leave the stock market? Lots of red in there, right? Lots of red. Where we got the majority declining, hitting new lows. Stocks, 73% of stocks hitting new lows, and a little bit over half below the 50-day moving average, almost 60% below the 200-day moving average. In the news, all right, this guy he's in the news all the time anyways. Futures heading higher, huh? Well, they can head higher for a little while. We'll see what happens. That's an ad. Anything in there? Stocks mixed despite slowing inflation data. Yeah, that's why the news. Don't trade off the news. Well, I guess there's probably a way to trade off the news. Got the dollar here, TLT. What's gold doing? You see what it's doing. So crude oil moving back down. Got the Bitcoin futures. VIX still in this range. All these charts are 1 month in 1 day. So basically, S&P 500 going sideways, Dow Jones kind of going sideways. It looks down. Maybe if we would see a longer time frame, it might look down. Speaking of longer time frame, we see the 200-day moving average moving up here, 200-day moving average moving up here, 200-day moving average moving up here. And this could be range bound. We just don't exactly know the range. See some range boundness here. Could be range bound here at the low end of the range, at the high end of the range, and Russell 2000 just kind of falling apart. Quickly looking at a quick chart of XLF, since I have an open position on that, and XLU. Put a position on that. We placed the order. Here's the order. It got filled. How can I tell it got filled? Because the sell thing is gone from here and showing a quantity of 1. Sold it for, we got filled at 40 cents. And I don't really care too much about this. The reason why I don't care much about this at the moment is because I'm holding this till expiration. And it's either going to expire worthless, and I'm happy with that, or it is not going to expire worthless, and I'm happy with that. So upon expiration date, I'm happy with either outcome, so I don't really care. I took in this $40. I know it says 40 cents, but it's times 100 shares, so it ends up being $40. I took in this $40, and I'm keeping this $40. I'll keep this $40, and I'll either take 100 shares of XLU at $67 per share, or I won't. But what we are going to do, pardon me, I'm going to move this over to long stock. Even though I don't directly own it, this is a strategy for potentially taking ownership of stock. XLF, we got 2 days left on this contract. And excuse me, 2 contracts, but 8 days left. And I'm just going to let it ride out. Like sometimes what I'll do, depending on the situation, if there's more days till expiration and I'm getting close to 1 cent, I might put in an order like this to close it out at 1 penny. Right, place this order. So now this maybe I'll get closed out a little bit early and pay $1 to close out. But I just don't care enough. So maybe if there was like 2 weeks left or something, but I'm just gonna I'm gonna attempt. I'm just gonna click the wrong button right there. Boom. What am I trying to do here? There we go. Cancel order. Let's take a relatively quick look at. Right now we're looking at XLF. What is this? 5 years. Let's go to. Let's just go to the 6 month, 1 day. This is XLF. What's our strike price at? Or yeah, strike price is at $30. And oops, strike price is at $30, and so we're a bit of ways away from $30. According to this, probability of expiring in the money is at 6%, and for this one, probability of expiring in the money is at 25%. Let's take a look at the charts on that one. XLU 67. All right, so we've got it's got to get through the 68. I think 68. If you watch yesterday's video, I think 68 has a bit of support there. We will see if it gets through 68. It's got to get through 68 and all the little. It's got to get through 67 and all the 100 pennies and be past 67 for us to take assignment, and that's totally okay either way. This is a defensive stock. Or defensive ETF. It's an ETF of defensive stocks. So if the stock market crashes and I have ownership of this, there is a probability that money will flow into this as a safe haven type of sector. And so that's one reason why I'm experimenting with this. And it looks like not too bad of a dividend. A little bit over 3%. Option premium isn't the greatest with this, but that's okay. How much did we make today anyways on some of that? Oh yeah, 40 cents. So $40 for 15 days. Yeah, I'm okay with that. So looks like stock market. We'll finish this up with. Let's take a look at the S&P 500, SPY. Right, just in the last 6 months, you can see we're in this range, right? We're in this range. It seems to be topping out around 415, right? It gets close to 420, and bottoming out about 380, right? So you can make all the jokes about 420 and 380. If you don't know what those numbers are in reference to, who cares? By the way, check out the stuff we got over here at I Have Success, because if you have an internet connection, a bank account, and you spend money at least once a year, then you really don't have legitimate reason not to be selling cash secured put options. But yesterday I put a video on 3 reasons why you shouldn't sell put options, and one of them is if you're a flipping complainer. So if you're a complainer, just stop being a complainer. That's the best advice I can give the complainers. You guys have a fantastic day. Let me know if I can help you. Aloha.